Welcome to Tip TV Education. I'm here with Corvin Cordila, who is a hedge fund manager and also the brains behind Tip TV Education.
Thank you very much.
Good morning, Corvin. How are you doing?
Very good.
Right. Basically, maybe you can explain to us just what Tip TV Education is all about?
I was invited to give a series of mini videos to really elucidate what it means to trade, the wider industry, and give some framework of thinking around how to become profitable. My own personal background, I've been in the financial industry now for 16 years, traded at big hedge funds and investment banks, ultimately setting up my own hedge fund, and then going off into education, trading my own capital. And one of the wonderful things about education is you get to connect with people. Obviously, different people have different goals and aims, and I'm not everybody's cup of tea. But as you reach out and you touch more people's lives, you see that all of them become more profitable. Not necessarily because everybody has found the Holy Grail, but more because people become rooted and have guidance and build a tribe within which to work efficiently.
I have to say, I met you a few years back, actually, and you did touch my life in that time. There was a few interesting points there, but no, I mean, the point was actually, it's sort of like your laid-back style, which I remember at that time, but the mindset of being a trader seems to be the most important thing, as opposed to actually the mechanics or the knowledge that you necessarily need. I mean, once the knowledge might just take a few months, let's say, but the mindset is the thing that really needs to be worked on. Is that fair thing to say?
That's a fair thing to say. I've met quite a number of people at business schools who are now in their early 20s doing MBAs. And one of the biggest issues that they face is, what are they going to do with the rest of their lives? And the classic example you see here is the myopic perspective. Very few of them sit down and say, at the age of 40, I want to do this and have this, and then build out a ladder. And it's the same in trading. Very few people say, well, within 5 to 10 years, I want to have accumulated this kind of wealth, and these are the steps I need to take, and I will take them. Most people just look at this trade right now is going against me or for me. I must be right. Oh my God, it's not right. I'm going to double up because I don't want to incur the loss. And all of a sudden it just goes to hell. And I think that's the biggest bugbear for most of humanity. They want immediate results, and very few people have a long-term perspective, which is really ultimately the mindset that will make you successful as a trader.
Right, well, let's look at the presentation that you brought in today. How hedge funds work, fxmastercourse.com for people who are interested in that idea.
So if we go to the next slide, the purpose of this section and the series is really to answer the question as to what is it that the industry has that I don't have. And there's a big perception amongst retail traders that somehow there's a holy grail. If you look at a lot of sales material that's being pushed to retail traders, is you will find out the secrets of a hedge fund, as if these hedge fund people are 7 foot tall, live 1,000 years, and have just come down from Mount Olympus, and they haven't. They're human beings just like you and I. So why are they important? They're important because hedge funds overall have performed very well over the last couple of decades and outperformed the benchmark. So what is it that they have that we can emulate? And that's the real question. It's not about us fighting hedge funds or that the hedge funds are sniping our stop losses or pushing markets to take us to the cleaners. Actually, in terms of volume and trading capacity, retail traders don't really feature on anybody's radar. So what is it that a hedge fund has? Well, I can emulate.
Okay. So
first of all, and this is really within the foreign exchange space because that's my area of focus and expertise and background. Let's put this into perspective. Going back to hedge funds are not that much different from retail traders. The FX market, really at the top, has a set of players that are crucial to it. The central banks that set policy and facilitate liquidity, the major investment banks that trade with each other and provide prices, and then via electronic means disseminated to third-party consumers, such as small-tier banks, corporates who need to deal, ultimately also hedge funds, and retail traders themselves via the brokers. And guess what? Having been in hedge funds, I can tell you that hedge funds ultimately also, via their prime brokerages, the big investment banks, sit there and think, why have I just been stopped in such a thin market? Am I being hunted? So I can tell you the paranoia that retail traders face exists on the desk as well, especially in markets which are OTC and decentralized, such as the FX market.
Right, so we've got the hierarchy here. Surprise, surprise, retail traders are at the bottom. I can't believe that.
Well, unless you see, this is really interesting nowadays. You have electronic platforms, especially in FX, such as Hotspot and LMAX and others. Not that I'm doing advertisement here, but you can certainly, if you have the capital, and even EBS, you can plug yourself in and you can benefit from the speed and the tight spreads that institutions have. So it's not like it's a closed market, closed off to anybody. We're talking about retail traders who have limited capital, maybe $10,000, $20,000 to invest or to trade with. But even nowadays, if you look at the retail providers and the brokers, spreads have come in incredibly tight. Actually, the tightness of the spreads, sometimes we're talking about 0.4, 0.5, 0.6 on Eurodollar, is to the detriment of the investment banks. You'll find that on the interbank market, spreads tend to be of the order of 1 pip. And so banks are running around trying to figure out how the hell am I going to make money out of these spreads if other people down the food chain are actually getting tighter spreads and I have to take the brunt and the burden of it.
Okay. And your hedge fund?
Well, yes. So the question is, how do hedge funds work? How can we emulate them? I suppose from somebody who's viewing this miniseries, he's going to ask, who the hell is this guy talking to me? So this slide really is there to give you a background as to where I've come from. So in 2011, after having been in the city and traded in various places, I decided I can set up a hedge fund. I got seed funding from investment banks and other big players. And ultimately in 2015, got an excellence award from Barclay Hedge. And the fund is listed as part of their 82 currency managers. And in this chart, you also see the performance we posted in the 5 years that the fund was live, where I was involved with it. So it's predominantly a currency fund, the G10 currencies, which means the usual ones that people understand, know about, but also the Scandinavian, NOK and STOXX as well. That's considered G10, though it's not very liquid. And
so you've done well. You've got your badge of approval, badge of honor on there. You kept that rather quiet, actually. I didn't know about that.
Interesting enough, I didn't actually know about it until a month ago myself.
So that is, that is, you're not a salesman just trying to pitch something, flimsy. I mean, you do have this, you really do have you've been at the coalface, and you have.
Yes, and I'll tell you, it's one thing to make money, it's another thing to lose a ton of money, and sometimes you're talking about 7-digit losses, and you've got the phone buzzing, and you have to actually answer to an investor, why the hell is my money gone down the drain? And, well, first of all, you signed up with me, and you understood the risk parameters, but ultimately, the one thing that worked as a very good sales point for us, we never ever broke our risk parameters. So if we said to somebody, we're not going to lose more than 10% for you in a year, then that never happened. We're not going to exceed our risk limits, that never happened. So it was all about stringent risk control and sticking to the parameters. Ultimately, that's the big advantage that retail traders have over big investors. Their risk parameters can be much more flexible and much larger. And that's also the real message about what it means to trade in a fund or to emulate a fund. It's the combination of having an edge and having risk control. And these were two topics we talked about previously.
Okay, well, that's it for part one. We'll be back with part two in a moment with Cor Winkeldealer.